Edidiong Iwang is back to review the debt and currencies market. Over to you, Eddie.
Well, obviously, at the unlisted securities market last week, the NASD OTC Securities Exchange closed the week positive by almost 2% to 716.96 points, and that's compared to the previous week's 703.01 points. NASD investors gained 10.24 billion naira last week as the market cap increased to 526.65 billion naira. On the flip side, volume, value, and deals were lower. Volume declined by 96.14% to 224,488 units. Value also dropped 49.40% to 14.403 million naira, and all of that was traded in 34 deals. Moving to the fixed income markets now, the bond market maintained its post-auction rally at the beginning of the week as demand was witnessed across board, particularly on the long maturities. However, towards the end of the week, the bullish trend in the bond markets weakened as profit-taking activities were seen across board, especially on Friday. In all, yields declined by 50 basis points week on week. On Friday, we saw 20 deals worth 14.17 billion naira. The Treasury bills market started the week on a relatively quiet note as very little volumes were traded across board on the back of the anticipated primary market auction. Activity remained weak for the rest of the week. On the back of limited market supply, on Friday we saw just 10 deals worth 306.98 million naira. At the OMO market, average yields across that curve increased to 5.16%. There was sell pressure seen across the short and mid-term maturities, and especially the 13th of August 2020 bill, that increased by 60 basis points. In all, there were 14 deals worth 8.75 billion naira. Well, let's talk to Bosun Obembe, an FX dealer at Access Bank, for more. Good morning, Bosun. Thank you for coming on the program.
Good morning. Thank you for having me.
Last week, the CBN increased the bid price for FX at its secondary market intervention sales window to 380 naira against the dollar. How will that shape volume of transactions at the I&E window going forward?
So if you look at the increase in the base rate in the retail SMIS window, which moved from 365 to 380, so which is in line with the CBN unification of rate across the investor level. So we expect this. They've already done it for the SME and visible segment. So before now, they used to set the fund there at the sub 380 level, but they are now selling it at latest level. So we expect this to actually bring improvement in the liquidity at the high-end window. If you look at last week, week on week, we have an increase in the volume by about 244 million. But we are not going to see the offshore foreign investors, which are the major players in this market, coming into the market soon because of the unattractive yields that we have currently. So you don't expect somebody to come and invest at maybe sub 10% when inflation is 12.5%. But this is the right move by the CBN, and we expect similar trend in the official rate this week.
So what's your outlook for the week?
So the outlook for the week, because of the last on Friday, that was CRR debit into the system, so that threw the market into a ripple. So in terms of market liquidity, I expect the OBD and overnight to trade at double digit this week. For the Treasury bill this week, there's no homo maturity and there's no NCD maturity until next week. So I expect the bearish sentiment to persist. And the same thing will apply in bond market. The bearish sentiment will persist until we see the bond calendar for third quarter. While for FX on Friday, CBN is going to inject about 250 million for the last week retail SMIS auction.
Bosun, thank you for your input on the program. Bosun Obembe is an FX dealer at Access Bank. Well, that's it on the market review. Over to you, BC.
Thank you, Eddie. And as we would always say, we hope for a profitable trading day. And that's today's program. Thank you so much for watching. I am BC Adebayo. See you next time.